Welcome back. Today, we are turning our attention to a company that dominates a specific yet crucial niche in the semiconductor world. We are talking about Lattice Semiconductor, ticker symbol LSCC. While giants like NVIDIA and AMD chase maximum processing power, Lattice has built an empire on efficiency, low power, and flexibility. We have analyzed their financial filings from 2020 through the third quarter of 2025 to understand their rollercoaster journey from a period of explosive growth to a severe cyclic correction, and now, the early signs of a turnaround. Let's start by defining what Lattice actually makes. They specialize in FPGA ice-field programmable gate arrays. Specifically, they are the leaders in the small and low-power segment of this market. Think of their chips not as the main engine of a car, but as the sensors, the controllers, and the security guards that ensure everything runs smoothly. Whether it is managing power in a massive data center server or controlling a robot arm in a factory, Lattice chips are the Swiss Army knives of the electronic world. Our story begins in the years 2020 through 2023, a period we can call the ascent. In 2020, Lattice was generating about $408 million in revenue with a gross margin of roughly 60%. Over the next 3 years, the company executed a flawless strategy. They revamped their product portfolio with the launch of the Nexus platform, which offered class-leading low-power performance. The market responded enthusiastically. By the end of fiscal year 2023, revenue had climbed to an all-time high of over $737 million. Even more impressively, their gross margins expanded significantly, reaching nearly 70%. Net income skyrocketed from $47 million in 2022, over $259 million in 2023. Investors loved this story of margin expansion and disciplined execution. However, the semiconductor industry is notoriously cyclical, and 2024 brought a harsh reality check. This brings us to the second chapter, the correction. Fiscal year 2024 was challenging. After years of stockpiling chips due to supply chain fears, Lattice's customers suddenly stopped buying. They needed to digest the inventory they already had. The numbers in the 2024 10-K report are stark. Revenue plummeted by 31% to $509 million. Net income crashed from $259 million down to just $61 million. The company faced a double whammy. First, the industrial and automotive markets, historically their strongest growth engines, slowed down significantly. Second, they took a one-time hit of $7 million for expiring production materials and recorded a nearly $14 million impairment charge related to their acquisition of Mirametrix. It was a year of resetting expectations and clearing the decks. Now, let us fast forward to the present fiscal year 2025. We have analyzed the latest 10-Q report for the third quarter ending September 2025. Are we seeing a recovery? The answer is nuanced, but yes, there are green shoots for the first 9 months of 2025. Revenue stands at $377 million, which is still down about 3.7% compared to the same period in 2024. However, if we zoom in on the third quarter specifically, revenue came in at $133 million, up nearly 5% from the previous year. This suggests the bleeding has stopped and growth is returning. The most exciting development in 2025 is the shift in revenue mix. While the industrial and automotive sector is still struggling, down 7% in Q3, the communications and computing sector surged by 21%. Why? The answer is artificial intelligence. Lattice chips are increasingly being used in data center servers to manage power and security. As hyperscalers build out massive AI infrastructure, they need Lattice's control chips. This segment now accounts for over 55% of their total revenue in Q3 2025, overtaking the industrial sector. Let's talk about their product roadmap. The future of Lattice rests on 2 platforms, Nexus and Avant. Nexus is their established small FPGA line. Avant is their new mid-range platform, launched to double their addressable market. In 2025, the company is banking on Avant to drive the next wave of growth, allowing them to compete for more complex sockets that carry higher average selling prices. Financially, Lattice maintains a clean balance sheet despite the 2024 downturn. As of September 2025, they have $118 million in cash and roughly $138 million in long-term debt. Their cash flow from operations remains positive, generating over $117 million in the first 9 months of 2025. This financial stability allows them to continue investing in R&D, which remains high at around 35% of revenue, ensuring they don't fall behind on innovation. However, no investment is without risk. The biggest red flag in their filings is geographic concentration. In the first 9 months of 2025, approximately 65% of their revenue was shipped to Asia. While this includes contract manufacturers, a significant portion is tied to the Chinese supply chain. With ongoing geopolitical tensions and export restrictions, this heavy reliance on Asia remains a critical risk factor that investors must monitor. Additionally, their profitability has taken a hit. Net income for the first 9 months of 2025 was only $10.7 million, a sharp drop from $44.6 million in the prior year period, driven by higher stock-based compensation and restructuring costs. In conclusion, Lattice Semiconductor is a company in transition. They have successfully navigated the post-pandemic inventory correction and are now pivoting hard towards the AI data center market. 2024 was the bottom, and 2025 is shaping up to be a year of stabilization and strategic realignment. Under the guidance of their new CEO, Ford Tamer, if the industrial market recovers in 2026 and the Avant platform gains traction, Lattice could be poised for another run of growth. But for now, it remains a show-me story, requiring patience and a close eye on the macro environment.